Folks, how are you? Just a quick little review. All right, so this is the Nasdaq daily chart, and before I get into it, um, this whole spring session, I've been focusing on showing you how, with experience, okay, you'll see people say, the market's going up, and why try to look for shorts when you can go long? Well, why only have one mindset? The market goes up and down, so it's not just a simple thing of saying, well, we're in a bull market, so only look for buys. If you have experience, if you know what you're looking for, there's simply nothing inherently wrong with assuming you have experience and you have control over your emotions and you're not trying to get trigger happy. You certainly can find shorts. Okay, so this is the Nasdaq. Okay, and I want you to take a look at the high here and how we went above it there. So in here, you could use this gap, but I'm going to focus on this one here because it's doing two things. Number one, it's the buy side about sell side efficiency prior to this high being taken, and it did not use it as inversion fair value gap here. Notice that. So it did not get to utilize its first utilization, meaning this should operate under the mode of inversion fair value gap. If we trade down below it, if it comes back into it, right in here, we fell short of it. See that? But now we have this high here. It takes out these relative equal highs. And then on the way down, there's nothing in here except for this wick. And you can use that. You can use the consequent encroachment of that. But I elected to use this gap here. And you'll see it in a moment, okay? But NASDAQ made a higher high when ES was unwilling to do so. So if we look at how the fill here, okay, see that? There's my exit, fill, and exit. Prices, you see them here. And I want you to understand that while this seems like it's a wonderful exit right there, it is. But I was not able to stay in the chart and work with the first presentation civvy here. And I'll explain why that's the first one in a moment. But I missed a really nice run here. Okay, and that's okay. I'd rather be Pop Michael than the trader trying to catch everything in a move that will repeat again. It's not a big deal. So let's take a look at the lipstick. Okay, and we have this buy side about sell side inefficiency. It runs above this high here. And now we can go back to first utilization here. And watch the consequent encroachment right here. Watch, ready? See that? Bingo. It's almost like I know what I'm doing, folks. It's crazy. So the market offers me that entry there. And before you start getting concerned about whatnot of where I got in and what I took in terms of a drawdown, it was only about 11 handles, I think it was, drawdown of like 11 handles, and then sold off. And this is the first presented fair value gap. Now, why is this one the first presented fair value gap? Because isn't this a fair value gap? Sure it is. Isn't this a first fair? Oh, it's not a first one, but isn't this a fair value gap? Sure it is. But this one here is doing something that this one and this one doesn't do. This swing low. That price run that took out the buy side over here, these relative equal highs, there's a displacement right there. So first present the fair value gap within the context and narrative, what price is likely to do. And that's the part it's going to take you a little bit of time to get good at, okay? You can't rush that. No 5-minute trainer mentors that go through my videos and say, I watched every video of Michael, so that way you don't have to only look at this and forget everything else. I promise you, if you listen to people like that, you are not going to learn correctly. You're going to stunt your growth, and you're going to feel miserable because you tried to have shortcuts and you've made it actually longer for you to learn how to do this instead of just simply submitting to it and do it the right way. Okay. So this displacement in form of a sell sign imbalance, buy sign efficiency, this candlestick breaks through this swing low. When there's an SMT divergence, higher high here versus ES, and we'll look at ES in a moment, but the market displaces lower. So when I got out, okay, what I was aiming for was the relative equal lows, which I'll show you over here. This blue line is June 1st, Monday's daily high. Okay. And I took you into that little video that I was recording. I didn't have time to do very much this morning, so I just wanted to show you that that exit was, in fact, what I was looking for. And then you watched it get filled there. Okay. So again, let's scrub over here. This line is 30,687 even. And then my fill is right there below it. You see that? Right there. So the fill on the short is right at the consequent encroachment of the inversion fair value gap within the context and narrative of looking for lower prices because of SMT, because we traded above Monday's old all-time high again, and then we traded up into this. Now, had I been able to sit in front of the charts, I would have lapsed the trade here with a partial, and then when it ran back up here, I would have added the partial here, taken off. Usually, probably would have been half off, so 5 contracts off, and then add the 5 contracts here, and then wrote it down to a deeper retracement. Now, this low here, it just so happens to form at the beginning of the macro 950, 1010. Then we rally up, we come back down in. Note this low here, okay? This low and this one right there. So that's 1001. So this has got a longer wick. So I would use this as a lunch macro low as a draw on liquidity. Why? Because during the initial stages of this morning, this is a Judas. The morning session is going to go up into lunch macro time, goes into first percent to fair value gap, consequent encroachment, trades back above June 1st daily high, and taps it one more time on the low right there. See that? Beautiful. Hits it and starts to work lower. And then we trade back in. I'm going to take this red line off because that was the target I aimed for my short this morning. So that way we take that off. Failed to touch the high of June 1st there. Weakness, fair value gap, bearish sell off. And this can be drawn out to right. Okay. And it's the lunch macro low that we're in drawdown to. And look at that. Beautiful. Beautiful. Trades right down into it inside the first hour of the lunch macro time, which is 11:30 p.m. I'm sorry, 11:30 a.m. to 1:30 p.m. So the setup forms in the first hour. It can deliver to target in the first hour, but generally you want to give yourself at least the willingness to hold during 12:30 to 1:30. But in this case, it went right down to it handsomely here. Got real close to take that sell side here, and then one more time, worked its way right back on up to June 1st daily high, but not before creating a minor buy side liquidity pool there. Sweeps it, we break lower. Same premise now. We have minor buy side. Price runs up. There is no fair value gap in here. This is the only one prior to that high being taken out. So this one here is going to act as an inversion fair value gap. Why? Because Michael said so. Not because supply and demand said so. Not because Elliott had a fork. None of that stuff. Rallies up, fails to get to consequent encroachment here, fails to go higher than the previous wick. That's exactly what you want to see. Fail to go higher than that one. Dump it. Sell off. Consolidation. Sell off. Relative equal lows. And that sell side liquidity at 30,496 even. Rips through it. New day opening gap. And this is where we're at the time of this recording. Beautiful, isn't it? So let's go real quickly back to the this morning. You can see the executions. And I want to take you over here because I know some of you are like, well, this dude, Mr. Reset. Let me see. I think there was a trade I did yesterday, wasn't it? What's the chance of it being on this as well? It's crazy, right? Right back into Asia. Uh-oh. Houston, we got a problem. Same stuff, folks. Same stuff. All the things that you would expect to see. Look at that. Look at that. Look at that. Ready? Here we go. Uh-oh. Watch them. Watch. Uh-oh. They're there. Oh, my goodness. If we go into yes, okay, and we'll look at this morning. Now, ES is a lot prettier. So we had relative equal highs here. See that? Beautiful, beautiful. And then it rallies up, Judas swing. Now this high is lower than the 7 o'clock high. So this is lower there, while NQ was higher respectively. Okay, so think about it like this. We had heavy distribution, S&P. At the same time, NQ higher. See that? So the Judas right there and creating the SMT divergence. So smart money technique, smart money tool, whatever one you want to go with, it's okay. I never settled on the actual, uh, final term for it, but just SMT, just a divergence between correlated markets. Okay, that's all it is. Beautiful, beautiful sell off there. Real quick, I just want to ask you how you doing in your Bitcoin. I left you with some opinions about this. That looks pretty bad, doesn't it? Thoughts and prayers, baby. Thoughts and prayers. We're looking at the daily chart now. Oh boy. So there's your first target. So we'll see if there's any acceleration below that. What's that guy's name? Sail away, sail away. Oh, Sailor. Sailor, that's what it was. He's supposed to be the savant with Bitcoin, right? He's never going to sell. He's did a lot of selling lately. Target 2, target 3, and again, we got one around 24,000, but I really like this one right here. This one here, to me, just it's got a special place in my heart, folks. This I got to tell you, okay? And this is not investment advice, obviously. It's my opinion. I've never traded crypto. I never would. And by the looks of things, a lot of people don't want to anymore either. So until I talk to you again, which hopefully, Lord willing, will be tomorrow, be safe,